Mark, most people have no idea what's going on behind the scenes in a real estate transaction between the real estate agents, the mortgage professionals. There is a lot that goes on behind the scenes. There's a lot of secrets they don't know that can help them get their offers accepted. Let's peel back the curtain, man. Let's talk about that today. I'm doing business across 48 states, but I know you're here local to Sacramento, California. So let's start local Sacramento, California. My first question for you, Mark, is from a sell side perspective, because I'm on team buy side. That's all I do is work with buyers. What are you seeing come across as far as offers go? And the reason I'm asking the question before you answer it is because I want to know what my buyers can do to help make their offer stand out, help get it accepted. Because some of these homes, entry level are getting 8, 10, yesterday, 18 offers.
I think here's the thing that I'm running into most than anything else is it's like cash is a lot. I'm seeing a lot more cash offers than I have been before. A lot of baby boomers coming in, moving to the Sacramento area. A lot of people have cash. Cash is what it is. And like you're seeing a lot of people compete with people with cash. It's a hard thing to jump into, especially if you're a first-time home buyer and you have to like get a loan. I would say, one is don't give up. It's a tough market. I mean, low inventory, higher than normal interest rates, and we're running into the summer rush, which is brutal. It's not going to be easy. I would say the biggest thing you can tell your clients is just pack some water. Understand this is going to be a long journey and, you'll get them there. But to have a little patience, to be realistic, to understand the market. I think a lot of people will make that whole idea like, hey, school's out, so let's jump into a house right now. And it just doesn't work that way. Education, figuring out the market, getting a good strategy, getting a good team together, and a good team together. You know how that is. I mean, you've worked sometimes with realtors that you say like, oh my God, this is killing me here.
Right. Well, that's something too. I continue to say it as much as I can possibly say it to consumers. Like it matters who you work with. And as much as I like to say the mortgage professional is really important, structuring mortgage is really important. Like you're not even in the game if you don't have a great real estate agent. And so I'm sure you've got stories galore on, being on the list side, offers that come across that didn't even stand a chance. They never picked up the phone. They never talked to you. They wrote a blind offer. And unfortunately, the average consumer has no idea. Like they're just out there and they're excited to buy a house and like, oh, that one looks pretty. Let's write an offer. And they write an offer for $490 on a $500K listing. Had they worked with a professional who might pick up the phone, might call list side, you might say, yeah, I've got 14 offers so far. It's probably going to take 540 to secure this one. They'd never write at 490. They have, zero shot at it. And so, are you seeing that, like extreme amount of competitiveness and multiple offers, mostly just in the entry level?
No, well, okay, more in the entry level. I think in the Sacramento area where we're based, it's like 450s to maybe 650s. Those are the hot ones. Those are the ones that like a lot of people want, whether you're an investor, whether you're someone who's looking to just jump into the market and get used to the market a little bit. Those are the hot ones. That's affordable Sacramento. You know what I mean? I mean, definitely a lot of people are probably watching this video going like, that doesn't sound affordable to me.
Right.
3 years ago, whole different ballgame. Right now, that's affordable Sacramento. So a lot of people are jumping into those homes. And the thing is, like with those homes, it's just a hard market to jump into, especially if you want resale. You know what I mean? Like new homes, a whole different video. But for resale, it's just not a lot of inventory. Those things are flying. And you're having also big companies come in and swoop in on a lot of these houses as well, too. So there's a lot of competition for these homes. Like I always tell people, my biggest problem with my clients, and this is something my clients are horrible about, they got good taste.
Right.
They always pick the best house. No. So
nicest house in the nicest neighborhood.
And the one that
the best deal,
up,
right?
And the one that blows up, man. It's like, hey, we just saw a house. It's in Folsom. It's listed. I'm like, oh man, this is going to be brutal. But, you're seeing a lot of competitiveness. I mean, it's just really competitive of a market. And I mean, we kind of knew it would be. I mean, I think everyone was like low inventory, even though the rates are higher than people expected them to be right now. It's still like, we don't have the inventory against the demand. I always say like, if I analyze the market, it would be like, there's one slice of pizza right now for like maybe 5 people. Right. And that's the analogy I give. Now, if interest rates drop, you're talking about like 15 people for that one slice of pizza. So there is still a lot of buyer demand in this market, and it's competitive, But on the sell side, like, and this is something you probably see all the time as well too, is like a lot of sellers like their 2.75s, and they want to list their house that's worth $900,000 for $1 million. And if they don't get that million, they're okay. They're good.
Right.
They're
Yeah.
killing.
And that's something too that, if sellers are listening to this, I wish they understood. And this is something, I don't know if you've ever done this, but I think it would be a great idea to show those sellers what a mortgage would look like for somebody buying their home. Because they might have no idea. They're just like, oh, hey, I bought this home. I attached my 2.75 to it and I'm paying $3,800 a month. What's the big deal? I'm gonna sell it for a few $100,000 more. Well, you sell it at $1 million, 20% down at today's rates. Now all of a sudden someone's staring down, a $6,000 a month mortgage. I don't know if sellers necessarily understand that. But it's interesting. Even with those higher mortgage payments attached to higher rates, like I'm still seeing plenty of buyers in all price points. So we talked about the entry level stuff for the move up buyers, or maybe the luxury places. 'Cause I know you play more in those neighborhoods. What are you seeing around that $1 million mark? Still got plenty of buyer demand?
Still got buyer demand, but pricing dictates if a house flies or if it doesn't, like I think, like I said, a lot of stuff in the luxury market is some of it's overpriced. There are some areas that are just like pop for some reason, and they just have a lot of listings. Right now, El Dorado Hills is one of those areas where there are a lot of houses available in El Dorado Hills. No rhyme, no reason. Maybe a little bit because like fire insurance and everything too. But like we're seeing a lot of houses become available there that are sitting. So I mean, you have to really know the market. You really have to kind of like identify, like also as a listing agent, like when to put a house on the market, right? If you see like 5 other houses on the block that have been sitting and you're going to throw your house out there, not a good move. You hold off a little bit and you kind of reevaluate the market. So for me, I mean, selling, like buyer activity, it's just kind of par for course, I guess. I guess there's always some problem du jour in the real estate industry, right? Higher interest rates, lower inventory, everything too. Like we haven't hit like any like big, like ever since COVID, like any black swan event. I mean, those are the big ones to watch out for. But for the most part right now, I don't know.
The big dark cloud just seems to be affordability.
Yeah.
Like for me and most of the buyers that I'm talking to, I want to rewind a little bit because we talked about entry level. I got a special place in my heart for first time home buyers.
Of course.
I think like this time is especially difficult for them. You mentioned, sub 500 price point. I know you're a guy that knows neighborhood to neighborhood better than most. Where can people still find something sub 500,000, Sacramento and surrounding? That's a halfway decent neighborhood where you wouldn't necessarily have to have bars in the window or a concealed carry permit.
Okay. So I think if you're looking for 500, I think if you were looking for something like a 3 and 2 for 500, North Natomas, I still like. I think the appreciation is going to go. I love the area because it's close to downtown. It's close to the airport. It's in Sacramento proper as well too. Yes, you have flood insurance. That's an additional like $100 a month. But I like the future of North Natomas. I think it's an area that for the most part has been overlooked. I like the appreciation there. I think also Elk Grove, if you're looking for like a 3 and 2 in Elk Grove under 500, not the easiest thing to do because it's probably, in my opinion, the most competitive market in Sacramento. But at the same time, I think if you got a good real estate agent, Elk Grove is another spot. I think, the appreciation is off the hook there too. And it gets you the Elk Grove Unified School District. And it's an area where they're building in a train station to connect into downtown or the Bay Area. It has a lot of pros as well. For me, a lot of times, like when I'm looking for clients, especially in that price point, I'm looking for like 3 things for them, right? They're looking for like the waterfall countertops and all that stuff. I'm looking for like appreciation, an area that has good short-term rentals and long-term rental possibilities, because eventually those houses tend to be their stepping stone house. And eventually, like I always encourage my clients, don't sell real estate, just use it as your rental. And if it appreciates, fantastic, at a good rate, better than, the stock market with 10% or something, you're in good shape. So for me, like I'm always looking for like those 3 things for clients. And so that's kind of where my 500 recommendations would come to. I would go like North Natomas, Elk Grove, like tougher. I'd probably looking at Old Roseville, which I still think is pretty good. I would say like maybe a little in Anatolia. I like Anatolia because it's so close to Folsom, and I like the Rosemont area. I've always been high on the Rosemont area. I think like near Sac State. Now everyone's going to say, oh, rentals to students. No, don't. They eat them up.
A lot of families in 95826.
Oh, 100%.
44 straight years I've lived in that zip code. And,
Well, the houses also, like for me, I look at it, they're very solid structure houses. There's not a lot to them, but they're built really nice. They got those deep closets. I just like that area, and I like the rental value there as well too. Appreciation, short term, long term, close to Kaiser's, close to Sacramento State. I like that area specifically. So those are the areas I would say for under 500 that people would look at and say, I like this as my first time home.
Yeah, I like that. I like that.
How about
Yeah,
you?
I agree with you. Natomas, like the last couple of times I've driven to the airport, I always get in conversations with Uber drivers. You'd be surprised at how much Uber drivers know about real estate.
Oh,
They're
yeah.
driving all day.
Oh, yeah.
And so, one of the last conversations with this Uber driver is he's telling me about, Amazon's factory plans and all the different stuff that's coming, with the, whatever the heck they're building where Old Arco Reno was, right? It's going to
Yep.
be some medical type training center or something to that effect.
Yep.
And so, yeah, I agree with you there. Elk Grove. What parts of Elk Grove can you still get sub 500?
624.
Okay.
Older part of Elk Grove, not the like big Sheldon Estates, but around
Yeah.
there you still kind of can under 5. 3 and 2, they're not going to be like these big houses like you'd get in other areas mentioned, like the Natomas. Probably looking for something like 1,500 square feet, something like that.
Right.
They're going to be older, but at the same time, if you're thinking of first time home, if you're looking for the schools, the location of the Bay Area, I think you can get it. I think there are also some builders that are building just over 500 in the area as well too, like Meritage. I think KB's out there as well too. So I think that Elk Grove still has a little bit, but I think that like if you're someone, let's say it's your first home, right? And you're working with a great realtor like our team.
Shout out to the Mark Mcdonough team.
Yeah, but if you can get into Elk Grove, like I said, it's not an easy journey, right? If you're saying like a slam bam, like let's get you into a house, but Elk Grove is worth those long hot days finding a house. They're worth like maybe a house that doesn't look pretty, but you can put a little sweat equity in because like I said, the Sacramento Zoo is going to Elk Grove. We got a new train station or train terminal that's gonna be out there as well too. We got like new Costco's being built, new schools being built. Eventually, hopefully one day we see the connector between El Dorado Hills and Elk Grove as well too. And it's the most southern part of the Sacramento area so that it connects, you can get to like the Bay Area in about an hour and 20 minutes or probably less than that.
Right.
So I do like the idea of saying, you know what, I'm looking for a 3 and 2. I'm keeping it under 500. It might not be the prettiest thing. You might have to put some paint on it and redo the floors, but based on what I'm looking at, the laws of real estate, location, and buying the most affordable house in an area that's up and coming, like Elk Grove, like that's, I mean, think about this. For you, let's say that you bought yourself, let's say we found a house after a year of searching. We found you a house, 485 in Elk Grove, a 3 and 2, 1,450 square feet, tiny little backyard. And let's say we get lucky and we're in the 757. What do you think that house is going to look like in 2 years? Like as far as like money, how much do you think you probably get for that thing?
Yeah, I mean, continues to appreciate people continue to move in, and so like that. I mean, that's what you don't have to sell me on real estate.
Oh, yeah.
Like,
But Elk Grove,
right? Yeah, and interest rates coming down the next few years, which we'll get to interest rates in a bit. What I really want to hammer down on is what you said, and you want to talk about getting me excited, getting my audience excited, start talking about investment real estate. And what you said is by far the best way to get started in real estate. You buy a humble first home, one that, is a 3-2, 1,400, 1,500 square feet in a neighborhood that's up and coming like that, and then turn it into a rental when you upgrade. And so I think a lot of first-time home buyers, for whatever reason, they want the glamour and the glitz and the 3,000 square feet
Yep.
on their first home. And, older, wiser 44-year-old me now will say like, no, you buy something that's well below your means, something that you can easily afford, especially if affordability is an issue for you. And then you move out of 95826, or you move out of 95624, you move out of that North Natomas area. Those places are great rental markets. So let's do a quick fun exercise. North Natomas, 624 Elk Grove, 95826. We'll call it College Glen because I know it encompasses Rosemont and College Glen, but I'm a College Glen guy. Do you have any idea what rents are? I could tell you College Glen rents. I don't know North Natomas or Elk Grove. And then if you had to pick, gun to your head, one of those 3 neighborhoods to buy your first starter home, which would it be and why?
If I could, I'd say Elk Grove.
Yeah.
There's so many signs pointing at Elk Grove being a big player. I mean, I look at it and I go like, first of all, Apple's over there too. They're building on new medical over there too. More stuff is coming to Elk Grove, and I do think that train station connecting Elk Grove to the Bay Area is only going to add more fuel to people coming into Elk Grove. Just a weird thing also about Elk Grove, and this is bizarre to me, but like out of any place in the Sacramento area, if you live in Elk Grove, you don't want to go anywhere else. I've seen people go to, hey, Folsom, we're going to go to El Dorado Hills, Grand Bay, da, 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 da. Everyone's moving around. Elk Grove is very, very like, people love Elk Grove. They stay there. Their families there, their aunts there. They went to school there. They love Elk Grove. And I like that too. The other thing too, I haven't hit on as well is it's close to downtown. And I see, and everyone's going to laugh when I say this, I see that when the A's come to town for 3 years, our downtown is going to explode. I think people who bought property in like areas like Oak Park, Tahoe Park, like Elk Grove, the Pocket, I think those areas are going to explode because I think our commercial downtown is going to just boom. And I think being close to downtown, but not too close. You know, Elk Grove's further enough away. But I like everything about Elk Grove right now. I mean, and just for me, I look at it and I say, you know, there's a lot of signs pointing to Elk Grove being just
yeah. You know, what's funny is as I'm picturing it in my head now, and when you think about those three neighborhoods, North Natomas, Elk Grove, you know, College Glen, 95826, it's literally like 95826, 10 minutes downtown. North Natomas, 8 to 10 minutes downtown.
Mm-hmm.
Elk Grove, 12 to 14 minutes probably downtown, but they're in different areas, but they're all, you know, close enough to downtown where you can get there. So yeah, I hope that all the cool stories I've heard about downtown all come to light, you know, monorail, Riverwalk, having the A's there for 3 years certainly is going to help, you know, inject some capital into that area. What other stuff you heard about downtown?
I think downtown, I mean, well, the A's for me is a big thing. Cause I mean, like, you know how it is sometimes, well, like, and I'm not comparing it, but like, you know, when the Olympics goes to a city or a country or whatever, it's like, the economy completely changes. You know what I mean? So like for me, I look at it and I go like, the A's coming here, I think like, you know how it is. And I was talking about this on a couple of my videos. I'm like, the Kings are it's just not just, it's not, how can I say it? It's not just like, oh, the Kings. When the Kings play, everyone is going to the game. Yeah. Everyone's wearing purple. I mean, like I've never seen a city so like pro sports. Like we love it. There isn't anything. Everyone's like Kings. Go
Whoever's
Kings.
listening, we probably need a major league team after we host the A's for 3 years. That's probably the play, right?
We're giving them a lot of love when they're here. I guarantee you. I've already talked to people. They're like, oh yeah, we're getting season tickets. We're this and everything too. So I think that for us, bringing all those people downtown. The other thing too for me is I look at it like all the people coming in for like seeing the A's games. But not only that. Here's the thing. Like if you're like a Texas Rangers fan, you know what I mean. You come to Sacramento, see them play, and all of a sudden you're seeing Sacramento with different eyes. You're like, man, I thought Sacramento was hot, flat, and not a great place, but look at this. This is pretty cool. So I like that. In fact, I think the Kings, because they were doing so good and there was so much like television on them, people were looking at like Doco and downtown and Golden One going like, this does not look like Sacramento that my buddy Bob told me about. This is like different Sacramento here. So I think that like when you have people coming in for games and everything too, flying in, maybe even to Sacramento Airport to see their team play the A's or maybe people from Oakland coming in, I think we're going to get a lot of more eyeballs on Sacramento. And I think that Sacramento is a very underrated, undervalued city. And I think that when people see what it's really like, they'll be blown away. I mean, I see this daily. I get people from the Bay Area and they're walking in, they're like, Sacramento, and then they're leaving. They're like, Sacramento, man, where am I going? What am I doing? Oh this is amazing. You know? So I see that. And I see like how people would come in and see the city and all the food and restaurants opening up. So for me, I'm like, it's going to be huge. 3 years of the A's here. Who knows what happens after that? But those 3 years are going to be epically huge for the Sacramento area.
Yeah. I'm just laughing to myself, imagining somebody who like flew into town for a Kings game in the 90s and went to the old Arco Arena, right? And the contrast of downtown Sacramento, brand new arena, Doco, all the surrounding development that's happened. You know, we are a whole new city, and being someone who's been in Sacramento for 44 years, something to be proud of. When I travel, you know, you're specifically talking to people, I think a lot, relocate to Sacramento. So you get the freshest perspective on what do people who aren't super familiar with the city seeing and falling in love with. When I traveled recently, I was out in Detroit and we're driving through, he's telling me about all the different things that are being revitalized in Detroit and asking questions about Sacramento. And I go, it's pretty cool, man. Hour and a half, Tahoe mountains, hour and a half the other way, go to the Bay Area or, drive to Santa Cruz and you're, beach or mountains, whichever way you want to go. It's 90 to 120 minutes. What are some of the things that you're hearing from people about Sacramento that most people either take for granted or just don't know about?
Well, first things first, it's like, okay, when I bring people in from the Bay Area, it's always the same thing. They're always looking there. They're kind of low profile, mellow, and they're looking around. And I'm always like, I know what you're thinking. They're like, what? I'm like, if you're moving to Sacramento, you want something sweet. They're like, yep. And I'm like, get ready, let's go. Yeah. And then by the time they're leaving, we found it. But all right, getting to your question though, like lifestyles, right? Like everyone assumes Sacramento is just flat, hot. That's what it is. But like, we got golf course communities that they're just amazing. Go up to Serrano, go down Greenview, and you're going to feel like you're in Calabasas. It's just nuts. You got Folsom Lake. You can buy a boat. You can enjoy a pool because the weather is pool weather. What else? You can go to like East Sacramento, feel like you're somewhere in Chicago. You just got so many different lifestyle choices here as far as like what you want to do. If you're a mountain biker, we got you. If you're like a road biker, we got you. American River bike trail or a trail that 32 miles of paved roads. If you want a boat and you've always dreamed about buying a boat, you can get a boat. In fact, there are some houses that actually have areas where you can store your boat. You're an RV person, great. You love wine country, let's go to Amador. Let's go to Elk Grove, there's wineries there. You want to go to Tahoe? Cool, hour, 20 minutes, we'll go to Sierra Ski Ranch, we'll do a little skiing. Like there's everything that you could possibly want here in Sacramento. The location's fantastic. And I'm always like, if you want the California lifestyle, Sacramento is the last affordable area in California that's going to give you that and give you something that when you pay your mortgage payment, you're going to look at and go, I'm not happy about paying my mortgage payment, but I'm pretty happy with my house.
Right.
And so for me, that's it. The lifestyle diversity here is crazy. And the questions I talk to my clients about is like, what do you like? Are you foodie? All right, I got you covered. Are you like, what is your thing? Because we'll make it happen for you. And the other thing too, and this is what always like seals the deal for a lot of the clients coming in. People are friendly in Sacramento. I don't know what it is. People assume we're not friendly, but like, we're driving and my clients are like, why are they waving at us? It's called being neighborly. You might have forgot about this. It's like, hey, it's like, how's it going? Like they're in your business just enough to not get annoying, but they're like friendly. How's it going? People are drumming up conversations. And I think that I grew up in Marin County in the Bay Area, and I had that when I grew up. But as I got older, a lot of people moved in and everyone's a little protective, like they're not as neighborly. Here you got block parties. You got like 4th of July. I mean, it's a thing here in Sacramento, people throwing parties, everyone having a good time. So I don't know. I could sit here for hours and tell you about how amazing Sacramento is.
Yeah. I mean, I think that people are sold on Sacramento. I certainly am. Now for the moment of truth and the peel back of the curtain, because I think this is what people that come to me want and quite honestly need. You fall in love with Sacramento, whether you're entry level, your first time home buyer, whether you're a move up buyer, buying something on the nicer end, there's limited inventory.
Right.
And that's the problem nowadays. How in the heck do you get your offer accepted? I would love to just have some conversation back and forth. You've wrote a ton of offers. I've been CC'd on 100 offers over the last few months. Some are well written, some are great, some not so great. What would be, if you had to rank it, like the most important thing for a buyer? Obviously, if they're connected to a great agent, some of this stuff is done on autopilot, so they're not seeing it. But for somebody who's looking for the important things to make sure they have an offer or to get themselves prepared to write an offer, what's most important for you, especially in this low inventory environment?
Being flexible. One is like sometimes sellers need rent backs. Sometimes they want to close quicker. To be able to have everything kind of dialed in. Contingency deals are not great. In fact, in this market, it's totally, you don't want to do that. But if you are, get your house on the market, or at least get pictures and get yourself down the road on that. I would say if you're competing with a lot of cash offers too, I would say just have your, and this goes back to the realtor, have your realtor be like a little bit aggressive, right? What you're going to notice too is, and this goes back to the realtor, so this isn't as much buyer stuff, but realtors like in certain areas, right? You're always going to know the 4 or 5 people who are constantly listing homes. Call them. Gold River, I got all the people who list homes, and I'm like, you got anything coming up? Now it's so funny. One of my clients was like, "Oh, really? But like, are we going to get a deal? I'm like, you're not getting a deal. You're just getting a little bit of like a understanding of what's
Like an offer accepted.
Yes.
That's
I mean,
the goal.
they're still going to want to sell their house for a premium, but like understand that at least you get like a foot in the door and we start to look at it and see if we like it. And then you could put an offer that they can't refuse, a little Godfather stuff going. So I think that you need to kind of look at that, right? And like I said, like you have to do everything above and beyond to jump in and just be ready. Like being dialed in, knowing what you want is also very, very, very important, right? A lot of people who come into this area, they're confused because they haven't done their research. They don't know, they're not educated on the area. They're like, hey, we want Roseville, Rockland, or we're good with also Folsom. Okay, that's great. Let's narrow it down, because if you narrow it down, then you're going to be more willing to basically go all out for a house that you see, And the other thing too for buyers is be realistic about the market. Like Sacramento isn't the market, isn't the pricing that you saw 4 years ago. We boomed. And if you're expecting to get like a luxury mansion out here for $500,000, that ain't Sacramento anymore. I mean, it's still affordable comparatively towards the Bay Area and Los Angeles, but it's not Sacramento. So be realistic. And some clients, I mean, this sucks to say, but some clients need to suffer a loss to kind of really understand how the market is.
Right.
Even though you as a realtor want to advise them and say, look, it's competitive here. That house is probably going to go on Tuesday. And they submit an offer and you're like, I talked to the realtor and they've already got a couple of, and then they lose it. And then they realize what type of market they're in. And then the second offer tends to go a little bit better because they realize that your realtor wasn't just trying to get you in contract. We were trying to get you in contract.
Right. Yeah. Have a shot. And I think that's something that, it might not be what you want to hear, but you probably have to hear this as a buyer. You work with a great professional real estate agent. Like you hired them for a reason and you went out and sought a high level real estate agent to be able to give you that expert advice. When they give you expert advice, you should probably listen to it.
Yeah.
And it was funny when you were mentioning it, sometimes you got to miss out an offer to kind of understand. Sometimes people take 2 or 3 and then they realize like, oh, when Mark told me that, this one, we probably need to go to, the mid 500s to get accepted and, maybe waive the loan contingency or shorten contingencies and give 30 days rent back. Maybe he said those things for a reason. Maybe there was some stuff behind it. I want to pick your brain too, because I'm involved with a lot of different buyers. I love living vicariously and I'm in the game with them, team buy side, whatever I can do. Let's get a full file together. Let's run DU so that when I call the listing agent, I can honestly tell them we've got a full file. We've run DU, well qualified. We've verified income, assets. I'm going to get this to the finish line in a timely manner. Even when all that stuff is done, there's multiple offers I'm thinking of specifically right now in my head where it's a multiple counter situation and the buyer's like, Matt, what do I do? So I'd love to hear your take on this. When a list side has multiple offers that are relatively close and I've talked to list side on these deals. And so they're telling me like, there was no standout. There's a bunch of really good offers. And so they do a multiple counter. What do you do as a buyer? And then what would you do as an agent in that scenario to try to figure out like 520 wasn't going to get it done. It wasn't a standout. Do we got to go up to 530? Is it going to take 540? How do you decipher that? How do you get to that? Like, I want to put my client in the best position possible. We don't want to just, throw a 550 number out there and quote unquote overpay. What's the play?
Well, before I get into that, I want to say something. You just hit something that I've seen a lot of people not throwing out multiple counteroffers. Even with like for me, it's like top 3, send it out. I think if you're working with a listing agent and you get multiple offers and they do not send a multiple counteroffer, they're not a good listing agent. I'm going to say that, controversial, whatever. I think they're lazy and they're not doing a service for their client. They're doing a complete disservice for their client. If you get 3 offers in for a house, let's just say, each offer is super close and everything's competitive, and then your client picks one, you should always send out a multiple counteroffer to see if there's additional money out there. If someone wants it extra bad, that's your job. And I see listing agents sometimes not sending multiple counteroffers, and I'm like, if I was in real estate, I would fire you. I would fire you on the spot. I think that it is so lazy. It is so like, yeah, let's just pick an offer. I got to go to Cabo in about an hour. Let's just get this done. It's like, come on, man. Like your job is to get your client the most money possible for their house. Of course, do the best job you can. But in listing agents now, I'm like seeing it like they didn't send a multiple out. Are you kidding me?
I'll try to play devil's advocate. Could there be a reason? Could it be like, hey, this one, I never got a hold of the lender, or their financing didn't seem too strong, or this one, you're saying a situation where there's relatively competitive offers that are all pretty close to each other. Don't just pick one multiple counter with the handful that are all kind of similar.
I mean, if your job is to get your client the most humanly possible and you've already established the bidding war, why would you not continue the bidding until you got your client the most humanly possible? You know what I mean? Like, why wouldn't you just say, okay, we got 24 hours. Even if you go submit your highest and best and send it out there, call it a day. Like I said, like, I don't see any reason why someone wouldn't do that. And one, it also gives the buyer's agent another chance to see, okay, look.
Right. Yeah. Bring it back to their buyer. Hey, there's multiple people interested. So there was a counter offer that went out to us and a couple others. Now what? This is where I think, I don't necessarily have the answer. I've told my buyers, well, lean on your real estate agent. Your real estate agent should go into investigation mode and try to dig out as much as possible. So let's put you in that scenario. You've received a multiple counter. You're working with the buyer side. What do you do now? The client tells you, Mark, I want this house, man. I don't want to overpay for it, but I really want it. What do you do?
I mean, overpaying is such like a funny term, right? It's like, well, do you want it or do you because everyone's going to feel like everyone, when they buy a house normally feels like they overpaid a little bit, especially in a competitive market. You're always going to feel that way. You're going to be like, I probably could have paid $10,000 less. So I'd say for me is number one is like, if there's a deadline, like I tell this to everyone on my team, submit your multiple counter 5 minutes before deadline's over. Talk to the listing agent 5 or 6 times, even if you have to go to his office, get in front of his face, establish our relationship, and not like meanly or anything like this, but establish that kind of rapport, right? But you have to stay on top of the listing agent. The other thing too, you have to sniff around for, and this isn't an easy thing. This isn't an easy thing to do at all. You have to sniff if the guy is double ending. Or the agent is double ending. Because if the agent is double ending, they're going to start avoiding phone calls. They're going to start doing everything they kind of can. So you got to sniff out the double end as much as humanly possible. So you might actually have to go a little further up, and the idea of overpaying is like, I think of it this way. Like when I got my house 2 years ago, I upgraded. Did I feel I was overpaying? Yeah, I felt like I was overpaying. Did I get the house? Yeah, I got the house. I'm happy with it. I'm good. I'm fine.
Right. Yeah. I remember it plain as day. 2020, listed at 430, paid 460. Wasn't a primary of mine, but it was like, oh my gosh, am I overpaying? Waived my appraisal contingency. It took what it took in 2020 to get the offer accepted. Now, do I have an investment property sub 3% rate? But it's now worth, $100,000 more. Yes. At the time though, it was uncomfortable.
Right. But for how long? For me, the uncomfortableness lasted for maybe a week or two. And then I started enjoying the house. I started enjoying everything. And now, 2.5 years later, I can sell the house for maybe 150 more than I bought it. And so I'm like, I'm okay. I did good. I did fine. But like, you're always going to feel that way. In a competitive market like this, you're always going to feel like you're paying too much. Yeah. You're just always going to feel like that thing. But I'll tell you, like the paying too much and getting it, you're going to feel better about that than the not getting it and loving the house and that being the house that got away.
Right.
And chasing it and saying to yourself, man, another house popped up. I like it. I don't like it as much as that one. And then all of a sudden the conversation is like, we should have just gone for it. We should have gone for it.
Yeah,
you don't want to have that.
That is something I hear so often.
Mm-hmm.
And to your point of like, sometimes it takes people missing out, the one that got away, before they kind of learn. More often than not, people like, oh my gosh, like we're talking about whether we're going to offer 570 or 560. Back when we were first looking, we didn't want to go up to 520 because, 510 was where we felt comfortable, and they would give anything. Rewind 6 months and go back and up that offer to 525, whatever it would have taken, because more often than not, it's like you said, people don't want to feel like they overpaid. But it's really just a funny term.
Well, the funniest part is like, let's say you overpaid by like 10 grand, not overpaid. Let's say you paid more than you thought you should have by 10 grand. In a mortgage scenario, how much does that look like monthly?
$39 a month.
Okay.
Yeah. At today's rates, I literally did that for somebody who was, and let me take that back. $39 a month is a $5,000 difference. So 10 grand, we're talking $78 a month, all in principal, interest, taxes, and insurance. And so, today's mortgages, people are paying $3,600 a month, $4,000 a month. And so it's like, if you were comfortable at 4,100, are you uncomfortable at 4,178? If it's the house, it's the house. If it's, a house in a neighborhood with the attributes that you like, and 4,100 is like a for sure green light. I can't imagine 4,178. It's like, oh, no. I'm not going to do that. But, it's interesting. And so I'm empathetic to people in this market who
Of course.
are, struggling with affordability. It's a large purchase. It always has been, right? And I would listen. I don't agree with everything Dave Ramsey says, but I listened to him recently when somebody posed the question to him about like, are homes unaffordable in 2024? He's like, they always have been. And then anybody who thinks that like you can have a part-time job or make 35 grand a year, in a major city and buy a home, like that has never been the case, and never has, never will. Right. And so, it's all relative. It's higher than we've seen it in the recent past. And a lot of people, their memories are relatively short, where it's like, man, back in 2020, and to that whole point of the one that got away, I've got buyers, Mark, that I showed them scenarios in 2018 and 19. Like, nah, you know what? I don't know if I'll be in Sacramento in 5 years. Maybe I'll just hold off. Maybe I'll just rent. Boy, oh boy, do they wish they bought.
I got people who pop on my live show on Wednesdays and that were like, you were totally right. Should have bought. I'm like, but here's the thing though too. And I always tell people, like, you're successful in real estate, like retrospectively. I guess what I mean by that is like the people who bought when the interest rates were 2.75, they weren't like, oh, this is awesome, I'm buying. I don't care if I waive the appraisal contingency, 2.75. They were freaking out. They didn't think they were making the right decision. I had so many people that were like, oh my God, appraisal contingency, I paid $20,000 more. And now they're the ones who said, oh yeah.
I wish I would have bought 10 of them.
Yeah. And they're like, I knew what I was doing. I'm a real estate genius. It's like retrospectively, it was a time, 2.75. We didn't know how long it would last and everything too. But I still think because that Pandora's box was opened, people expect 2.75s to pop in. And, I think there is a lot. It's funny, and, you're in line in Starbucks and people are like, what's your interest rate? Oh yeah, 4.5, 2.75. And then you got the guy behind you, VA, 2.25.
Yeah.
Like, it gets in people's heads, man. It just really messes with a lot of people. And, I'm like 2.75, we're not going to see that again unless we got a black swan event or something like that triggers it. But
yeah,
those days are over. You can't really think in those terms. You got to think about like timing your life, not the market, and just kind of focus in on exactly like if it's the right time for you. If your job stability is there, if you got money in the bank, maybe you had another kid, maybe it's just time for you to buy. But there's so many things online right now, like Zestimates and like all these YouTube videos, right? Telling us, oh my God, this buy, sell, don't buy. It's almost like there's so much conflicting information out there that it just makes everything a lot more confusing,
Right. Yeah. And that's what I try to do, honestly, is just in this sea of confusion and fancy terms and all that, just be somebody who keeps it simple. And somebody comes to me and I go, listen, we're going to get you pre-approved. You're going to fill out the online application, upload the supporting docs. Then 24 to 48 hours, I'm going to show you scenarios because being approved for a $500,000 purchase is not the most important piece. The most important piece is based on what you've got, you can do 5% down or 10% down. Here's what the monthly mortgage payment looks like. Now, you know better than I do, based on what you're paying in rent right now and how comfortable your lifestyle feels, is this a mortgage payment that you're comfortable with, regardless of whether or not you qualify? Because that's something that, people, unfortunately, still are just like, how much do I qualify for? What's the max?
Yeah.
And they don't want to talk about any of the details.
Yeah.
Public service announcement, ask for the details, want the details, analyze the details, have some idea about your budget. It's part of the maybe a bigger problem and a bigger conversation about the economy and
Oh
people's
yeah.
spending habits, right? But that's something that is coming more into focus with all the inflation and all the affordability around housing.
Well, I think everyone's going to start having to pay off their credit card debt fairly soon, and it's going to be hurting even more. I hear gas prices are going to go up. So the economy is in a kind of a weird state. So I think coming back to the idea of like just figuring out your life is going to show you when it's the right time to buy. You're going to feel a little bit more like, and it's never going to be like a slam dunk thing where I'm buying, let's call it a day. It's always going to be, there's always going to be some bumps in the road. There's always going to be that anxiety, but there'll be enough check boxes hit where you'll say like, yeah, this is job's good. I got some money in the bank, and we're everything's looking towards that direction. And it makes the buy a lot easier as opposed to going like, oh my God, am I missing out? I should buy. I shouldn't buy. My friend over there told me that this is a horrible market. Prices are going to drop to like nothing in like a week. I got to wait for that. It's like,
you're always going to have a friend. You're always going to have an uncle,
yeah.
somebody. But when you said it, I thought to myself, people talk about, having kids and other things in life like that. Like it's never going to be a perfect time.
No.
You're never going to know for sure. It's always going to be a little bit scary. And I think houses, it's exactly the same thing. There's going to be some things that start to align. You go, you know what? I'm feeling really good about this job and the trajectory of where I'm headed from a pay standpoint. I've got my student loans paid off now. Don't know anything on my car. Like I feel pretty good. Right. And so, in that scenario, my, public service announcement or my hope for buyers is like, go out there and get the information. It's amazing to be alive in 2024.
Yeah.
You want real estate information about Sacramento market, go to Mark Mcdonough's channel. Check it out. You'll find everything you've ever wanted to know about all the different neighborhoods in Sacramento. You want mortgage information. You don't have to have a finance degree. Just talk to or listen to a couple people that can put it in simple terms and talk to you about here's what mortgage financing looks like. Here's what 5% down at 500,000 looks like. What is an escrow account? What does that mean? All that stuff is available, which is something that, it's not always been like that. Right.
Well, here's another thing too, and going to your point as well too, like Matt, it's hard to toot your own horn, but like, I mean, the thing is like, I see a lot of YouTubers out there and they don't close that many deals. Like they just do their thing, lenders and realtors or whatever like this. Like the thing with Matt is like, you're the real deal. Like, I mean, you're pretty much it in this area for loans, and you've been doing this for a long, long time. So I think the idea also is to kind of like figure out the people who are actually, closing deals and the people who are just trying to do the YouTube thing and kind of get that stuff in as well too. I think like a call to Matt and figuring out exactly where you are. I mean, the thing about working with someone like Matt is you're going to get Matt, you know what I mean? And I think that that's very important as well is in the world we live in too. People reach out to me and I'm out in my car driving somewhere doing something. It's like, hey, is this Mark? I'm like, yeah, it's Mark. They're like, oh, wow, we didn't think you'd pick up your phone. I'm like, why?
It's what I do. It's my day job.
This is what I do, man.
Yeah.
I'm good.
And that's something too, that anybody that you're talking to that you want information about a certain subject, find practitioners.
Yeah.
Right. And I appreciate the kind words. I'm not the smartest dude in the room. I just happen to do a lot of mortgages. So I think I'm pretty good at it. Right.
Yeah.
And the analogy was great. Matt Ishbia, president and CEO of UWM, talked about his shoulder surgery. Right. You go to the surgeon who's done it 1,000 times, who, when you walk in, go, hey, I looked at the chart, looked at your x-rays, and here's exactly what you should do. We're going to get you with, this orthopedic, care plan, and we're going to do this. And in 3 to 6 months, you're going to be good as new, better than you were before, versus, walk into somebody that's like, well, I've never seen something like this before. And, I've got 12 surgeries under my belt since I graduated,
Yeah.
wouldn't give you the same amount of confidence. And so for buyers, that's always the goal too, is to transfer that confidence of like, you're in good hands. You're working with somebody who's done this before. And so it's not as scary as you might think, because regardless of how many times I do it, I continually remind myself and my team, like, this is their first time. They've never done it. A $500,000 purchase is a humongous deal to this person. And so let's make sure that, they're comfortable throughout it. And I still enjoy the heck out of it, man. I still enjoy the heck out of like being along for the ride with those first time home buyers.
Well, that's the thing. I think also like, you toe the line between someone who's like, how can I say, like, you could be one of those guys who basically no one talks to you. Everyone gets to your team and you're good to go. But like, you're like, tag me in, man, put me in, like, I think there's a lot to be said about that. Like, I think that certain people, and I see it in our industry all the time, like, they're like the name of the team, but no one ever knows them, talks to them. In fact, they, like that kind of thing. And like, the thing with myself as well is like, I love this stuff. Like, I don't want to be doing anything else. Like, I love real estate. I love being out there. I love talking to clients. I love, even if it goes nowhere. And I'm sure you have a lot of those nowhere calls that do. It's like, yeah, it's good.
Nothing to do with me, but I can set you up with the right person. Let's chat.
Totally. Or like, let's go. What do you got? But I think that like it's nice when you find that kind of mix of a person who like isn't trying to be a YouTuber, does a lot of business, and is still like so hungry and so passionate about for what they do that they're there. Do you know what I mean? And I think that like that's one of the things I think feel a kinship to you. It's like I love it. I was always talking about like, I'm so tired. I've been out in the hills. I've been showing, and I do, but like, I wouldn't change it. Wouldn't change it for the world. I love it. It makes me feel like there's an authenticity about the idea that like you're talking, like our conversation, it's not scripted. It's like not anything. It's just like, we're just kind of talking about our undoing our day, a little real estate therapy on like what we've been through. And it's the way I think more business should be. Less smoke and mirrors, and more authenticity, and just saying like, this is what it is, lay it all out. And if it works for you, great. You know what I mean?
Yeah. The good, the bad, the ugly, because real estate isn't, certainly isn't all sunshine and rainbows, man. Deals go sideways.
No.
Like on the mortgage side, there's so much stress. I was reminded yesterday, had stuff going on with my family where like, you're never going to catch me like stressed out, worried about, something that's mortgage related or real estate related, right? Like, cause health and family and human beings, are, on a whole different plane. But when you mentioned real estate and timing and buying your first house, and everyone who thought they were a genius for timing the 2.5% interest rates, I want to go back because I'm curious. I always joke about how I've got the worst timing. So I bought my first house in 06. When did you buy your first house?
God, man. What was it? Like, I got my mother's house in Marin.
Yeah.
So I inherited my mother's house and then moved out here. My wife had a condo here, so we moved into that. Kept the Marin house, which actually we're selling right now. And then
listed?
Yeah, it's already gone. Sold it like quick. We're selling in Marin. We have one coming up in Nevada. We have one coming up in Roanoke Park as well too. So for me, I kind of stumbled into it. I mean, honestly, like I guess you could say my first official, like myself, like outside of inheriting a property in Marin, was probably the Gold River house.
Wow.
Yeah.
Yeah. Yeah.
And it was fun.
People love hearing numbers for real estate appreciation. So what did your mom pay for the house, and then what did it sell for?
No, you want to hear that? The crazy part is my grandfather actually had that house. He was the first one in that house in Marin. I don't know what he paid for it. It was like,
what year was it? And I'll give you, I bet you I could guesstimate.
He bought it in I think it was like 54, 55 or something like that.
Yeah. I bet you it was like 20 grandish.
And we just sold it for like, what was it? 1.25. And it was a little bit beat up shape. So, but it was good.
Buy for 20, sell for 1.25. It's a piece of cake, real estate. Just hold on to it for 70 years.
Well, for me, it was, and that was one of the things that was kind of like, because my brother and I, like, it's like, it was my house, but when we sold it, it was going to be one of those houses that he was going to get some of the money as well too. I never wanted to sell it.
Yeah.
No. But family first.
Yeah.
Can't have a family feud going or anything like that. So that's what we did. But for me, I guess it is like, I got lucky with real estate, I guess you could say. Like the Marin house was great. Like the Gold River condo my wife owned was fantastic. And then the house that we bought in Gold River 2.5 years ago, I mean, we've done tremendously well on real estate.
Right.
And now we're probably going to be buying a couple duplexes and going in that direction as well too. I think our market in Sacramento, like, I guess my biggest mistake I made was probably not coming to Sacramento sooner. I think our market here is just untapped. And I think for me, like, for example, the house in Marin, when I came up to Sacramento, we were renting out, and it was renting out for like $5,000 a month. It was like an Eichler or an Alliance home, and it was like 1,800 square feet, and we were renting it for $5,000. But at the end of the day, if I could have done it all over again before the selling and everything too, if someone's in that situation, they can buy 3 rental properties here that are newer, rent them out for about maybe $2,500, $2,700 a month, and just, be able to live that dream up here.
Oh, for sure. Yeah. I mean, I look at the rental numbers all the time. A lot of my audience are investors. I'm a real estate investor myself with, 11 doors. It's not even close.
Yeah,
Right.
yeah, yeah.
Something you buy here, you buy a duplex for 600 grand in a nice neighborhood, rents for 2,200 a side. And so you're talking 4,400 in rental income.
Yeah.
That $1.5 million home in the Bay
Yeah.
might rent for $5,000. Right. And so, from a rental property perspective, it's not even close. So honestly, that's where a lot of the Sacramento investors in my book of business come from.
Oh yeah, yeah, yeah.
Husband, wife, engineer. I've got some right now.
Yeah. Okay.
They were looking in College Glen, and it's funny because for Sacramento, it's certain neighborhoods seem more expensive. For that Bay Area sales engineer money, they're like, well, shoot, I can buy something in Arden Park for $670. I'll buy something there,
Yeah, yeah, yeah.
and put 30 or 40% down on that.
Well, I mean, I think, like I said, like we're getting an interesting mix of people moving into Sacramento. I think a lot of people, I think Sacramento, when I grew up in Marin, it was like Sacramento was always that hotbed of like, you can get a rental here. Fixers became popular for a little bit too. But I see right now, I mean, with all the new homes, people jumping into new homes, even investors. I mean, like Sacramento is really coming into its own. Like I tell people, I'm like, by 2030, hopefully everything will be good. But I think 2030, the landscape of Sacramento is going to be just crazy. I can't even imagine.
Governor.
Dude, I know. Well, I think, okay, you got Folsom Ranch, you got 30,000 homes up there. You got Elk Grove, probably another 30. You got Roseville, another 30. You got the A's coming here for 3 years. You got the train station, Elk Grove, maybe connector happening between Elk Grove and El Dorado Hills. You got new schools popping up. You got new Costco's, and we all love our Costco's. It's going to be a different Sacramento. And I think that for a lot of people, if they feel like they missed out on maybe the Bay Area and they feel like they're getting squeezed there, Sacramento is so good.
Right. The run's not over. Like that's
No.
clearly what I heard there, because like we joked about earlier, you come and watch the Sacramento Kings at Arc Arena in 2005, then you come back a decade later, and they're building a new arena downtown, and you come back another decade later. Like it's changing drastically. We're not done yet, right? There's
not even close,
like
man.
Major League Baseball, as soon as they see how we handle the A's, team's coming. There's going to be, plans of a river walk, all the cool stuff I've heard, I believe it. I'm a big believer in Sacramento. What I want to do, and I apologize in advance,
Hit me.
if I pick a scab, but you're talking about family stuff and selling the house, right?
Hit me.
Well, real estate in 2024 with not as many transactions going on, a lot of them that are coming across my desk, quite honestly, are life circumstances. Because in an environment where you can get money really cheap and homes are way more affordable than rent because there's a 2.75 attached to it, everybody wants to buy, right? It just makes sense. In the environment we're in, where some people are stretched, some people are choosing not to buy, we're going through, divorce, and people need to buy and sell real estate.
Yep.
There's going to be, people that pass away. Homes are sold because of that. And so what are you seeing in your personal business? And how do people navigate that? I guess we can go either direction, like the inheritance, and you got to sell. I just talked to an agent yesterday who's got 5 heirs on this transaction, and man, like that's not easy, dude.
Well, I look at it this, and I was kind of saying this a while ago. I was like, we're seeing the 3 Ds, like death, divorce, and departing the state. Those are the 3 listings that you're seeing for the most part. Those are what normally we're seeing as far as people selling their homes. A lot of people, like everyone's always about the baby boomers, and there are, but they're kind of coming in, coming out. But what you're seeing more is just like that, those 3 things. Either people are leaving California or it's like, there's a death in the family and they're selling mom's home or dad's home or something.
I want to inject real quick because I want real world advice. Somebody dies, heirs are selling the home. This is never friggin' easy, dude. What's a piece of advice you give people? Whether it's, just don't be an asshole. Like
demonetization. YouTube, no money.
Cut that part out. But I see it a lot of the, I mean, when there's, tragedy mixed with, family emotions and money, like it can get gnarly. So what's your advice for somebody who's in that current situation? Cause I know a lot of people are, on how to handle, the sale of a home in the case that you inherit it.
I'm going to tell you something, like, and this is words that I live by. Don't make money your primary motive in anything you do. Just don't. It's not worth it. It's in the long run, it's going to fade away. I'm always saying to people left and right, time is the most precious commodity you have. Time is everything. Time with your family, time in what you're doing. Time is so limited. A lot of people don't see that. And don't mess with your family. Don't get into a squabble over money. Money will be gone and it'll be whatever. But the best thing you should do is always put yourself in their shoes. And that's what I did for me. And that's why I sold the house in Marin. I said to myself, like, I would love to keep it as a rental for the rest of my life, low property taxes and everything too. But it was stressing my brother out because he needed some, you know? And so for me, I didn't think twice, you know, like, is it business wise, would I have done it? No. But like to keep the relationship between my brother and I and to keep the family intact and everything good and put that first, that's why I did it. And so for anyone getting into a situation with an inheritance, put your family first, put your relationship, because you're not going to get that back. If you somehow have a break, if somehow like you don't talk to your brother or sister, or maybe like your father, whatever, for like a while, that's time you're not going to get back. Always put your family first. And in the era or whatever we live in, where everyone's like money, millionaires, bling, 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 all that stuff doesn't matter. It's your family.
I agree 100%. And I've dealt with my fair share of divorce transactions.
Yeah.
Well, we got to decide who's going to keep it. And are we able to refinance? Do we need to take a HELOC to get this person paid out? And the amount of times I have to stop and tell someone like, listen, I'm an unbiased third party.
Yeah.
But 10 years from now, 20 years from now, when you're gone off this earth, like, is it going to matter whether you got an extra 10,000, whether you guys split it evenly, you know, whether the appraised value that you guys agreed upon was 565 or 570? The answer is no. Right. And so for anybody listening, I agree with you 100%. I think we're aligned on a lot of stuff, brother. That's why we get along so well.
Oh, totally.
So, and so I think the same advice goes for those scenarios. And, you know, just to give some perspective to people who are going through divorce, because that can be really, really tricky. Like, we have a marital settlement agreement in place, you know, who's going to keep the house? And so who's the lender going to have to, like, you know, mark this debt to be paid by, if the one leaving is trying to buy something new. In those circumstances, my best advice to you is get with a lender who's going to give you, you know, great advice. It's not right for everybody to immediately go buy something. People are so opposed to renting. And a lot of times I'm like, listen, I know plenty of places that are flexible that aren't going to require you to sign a 12-month lease. You can do a 6-month, you can do month to month, but get all this stuff behind you. Marital settlement agreement, figure out, you know, how you're going to get, you know, paid your half of the equity in the home, or whatever the case may be. But gosh, I think I'm landing on, just don't make it a bigger deal than it has to be.
Oh yeah. And don't make any decisions right after you're coming off something that is just going to set the tone for you going in a bad direction too. You know what I mean? As far as like house, as far as maybe kids are involved, you know, like it's just, I don't know. I would say like, yeah, step away, take a little bit of a deep breath, maybe get a mediator or something like this. But like, you know, for me, it's just all about keeping the family intact and kind of keeping it going.
Yeah.
That's it, man. That's
the 3 Ds you mentioned were death, divorce, and departing the state. I want to ask you about that, but sometimes people even talk about diamonds or diapers, right?
Yeah.
Having kids or getting married, for departing the state, because that's happening. And I've seen an interesting trend, departing the state and then coming back.
Yeah.
I've got a recent deal that was Texas. They went out there and there was no trees in sight for miles around.
Yeah.
They're coming back. Another one that was a Tennessee. And I think a good word of warning is some people timed it in a way where, whoops, like you might not be able to afford California anymore.
Yeah.
You know, you sold in 2019, went and bought something, and now you're like, well, I'm going to sell the place I bought in Memphis, Tennessee, or wherever the heck you bought. And the math ain't mathin', to come back to California. But what are you seeing for people leaving the state? Maybe words of advice, because I know I get this a lot. Do you go out there and try to buy something first? Do you sell first? What's the play for somebody comes to you and says, hey, I've got family in Oklahoma. Everyone lives there. I'm going to relocate there. I've got 400,000 in equity. How would you help them navigate kind of that, you know, move across the country?
I'd probably say, hey, first of all, are you sure you're going to be doing this? And they're like, I'm not really 100%. I would say, why don't you move out there, rent your place out for a year and just feel it out a little bit, feel out the situation. A lot of people don't understand, like areas like Texas, it's humid out there. It's
Nasty.
a lot different. We're very spoiled in California, and a lot of people don't realize how spoiled we are until they move somewhere like Memphis or St. Louis or whatever. And then they're like, okay, like I was complaining about the hot summers in Sacramento, and I really was being a little baby about that, So I think that like you got to explore the spot. But I mean, if they're really dead set on, they're like, I'm moving, this is what I'm doing. I would say probably, feeling out, getting, first of all, working with an agent out there, like, but there has to be good like connection between agent. I'm not saying let me refer you someone, but it has to be someone with good connection, like good communication skills. You got to be able to communicate so I can get a gauge of how the market looks. And the realtor has to be good enough for me to actually feel safe enough for me to go, okay, how long do you think, based on what he or she wants, how long do you think it would take them to find a place out there?
Yeah.
I need to have that confidence in the realtor out there that they're going to tell me something and not just, tell me what I want to hear or whatnot. They say, hey, it's going to take like probably, if they're out here, probably about a month or two. Okay, that's fine. So how I would probably do it is just like, if their house, I'd probably aggressively price their house, which I always like to do, because I think a house is going to sell for what a house is going to sell for. So if you go 10 under what you want, I think it could blow up more as opposed to like listing it high, right? And having it sit. So I would say, okay, we do that. And then we add in maybe like a month or two rent back. You're good. You have your stuff maybe like in the house, you're kind of doing your packing slowly. And during that month or 2 months or 3 months, whatever, you're flying out to that area to kind of look for houses to make sure everything is good and everything is there. I like the idea of like slowly, not rushing into a house because you have to buy something. I don't like the idea of like selling your house and then all of a sudden, you're going to find a house,
land on Tuesday, be in contract by Friday.
Totally.
What's wrong with that, brother?
No, totally. Yeah. Easy peasy, man. Always works. I say, give yourself a little time, let yourself digest everything too. Get to know the area too. I would say probably do that. That'd be my thing. Do a little bit of a rent back, get out there, feel it out. And then just kind of come back and do the packing and get going once you've settled into a place you like. The other thing too is sometimes, like, let's say for example, like you find a house, like let's say in Arkansas, right? And you're selling your house here and you're like, okay, I'm going to sell my house, but I'm in contract in Arkansas. Like a lot of things can happen during that contract period. Maybe you find that there's dry rot, maybe there's foundation issues, maybe sewer issues, or maybe you just are like, after
realize it's Arkansas.
Totally. But, at the same time, make sure that you don't have it as a guarantee that house is going to close. Arkansas, go Razorbacks. But I don't know. I think for me, it's hard for me to because we've worked a lot of those situations. But I like the rent back. I think it slows the pace down a little bit. I think it gives a little person a little bit time to breathe. I think people underestimate the moving of stuff, the cleaning out of houses, and the transferring, especially if you're going cross country. Give yourself a little time. That'd be my best thing.
Yeah, that's good. And you mentioned in there about pricing aggressively, so I'd love to get your take on that. I've seen it, and as a guy who loves numbers, I'm a math guy, right? I'm not a real estate agent, so when it comes to valuing a property or the things that real estate agents really are good at in neighborhoods, I don't necessarily pin myself as an expert in that, but I understand math and I understand sales to a certain extent, right? And I've got a prime example of somebody recently where I'm like, why has this thing been on the market for 48 days? And I'll tell you why, Mark. It was listed at 870, way the heck out of what was normal. And so the weird part is, and I'll give my take and I'd love to hear yours, is even when they get to what the price should have been originally, which is now $699. Wait, 870, 699. Yeah. Now that it's been on the market for that long, it's stale. People like just assume there's something must be wrong with it. And so I like your point about, the market's going to pay what the market's going to pay. If you underprice it, you're going to get a lot of action. It's going to build it up and it's going to sell for what it's going to sell for. If you overprice it, people might not fire away at all and it'll end up sitting and you'll sell it for less. So tell me a little bit about your personal take on pricing strategy. Cause I know I agree with it, but I just want to hear it out of your mouth.
I think if you look at your house, you can see what houses are out there listed for and get a price per square footage, high and low. You list towards the low of the square footage. And I think the main, how you make this work is this. Like what we do is we've actually sold the last couple of houses from YouTube videos. So what we end up doing is that we price a little aggressively and then we market. Like I think one of the things I notice about real estate agents is they cross their fingers. Hopefully the MLS will just do enough, propagates to Zillow, Redfin, whatever, and that's it. I think that one of the things that you really need to do is understand that the week before you go live and even the week after, like you just have to put the hardcore press if you do aggressive pricing. You need to get butts in seats, and marketing does it. And like I said, for us, we price aggressively, but we've been lucky to get a lot of houses, to the price it needed to be at because we were able to market them with like YouTube videos and also go open houses, but also call brokers, get people in there. You know what I mean? Like, so I think one is price aggressively. Don't really rely on the MLS just to do its thing. The MLS is kind of, I look at it as lazy. I mean, throw a house on the MLS, you really don't have to do much. Photos, good description, throw it out there. But you really need to market. Like, and it's not like, how can you say it? Like you're marketing towards those people that might not be considering Sacramento and see this house and go, whoa, that's pretty awesome. You're marketing to those people at 2:00 in the morning. They're scrolling Zillow that hate their job and like, oh man, this is awesome.
If you're up at 2 a.m., you hate your job. Is that
yeah.
Is that what the studies show?
Or you're like totally stressed in your job. Well, either way. But I guess what I'm saying is like, if you can get those extra people to kind of look at the videos and stuff like this, you can get people to basically, you can get additional butts and seats, right? And that's kind of what we've done with YouTube videos. So we market them specifically towards areas too, like California, the Bay Area, DMA, San Francisco, DMA, and also Sacramento. But the key part to actually being able to, if you do go with the aggressive listing price is that there's a marketing strategy in place to maximize that. And that kind of makes what's called sellers a little bit more at ease. We say, yeah, you know what? I know you want $1 million for your house. We're going to list it at like $975. I don't want $975. I know, but here's what we plan on doing. We plan on doing this YouTube video. We plan on doing these open houses. We're going to call all these brokerages in the Bay Area. We're going to call all these brokerages in Sacramento. We're going to get so many people into your house that they're going to fall in love with the house. And because we're at $975, people who normally might not be looking for $1 million, but $975 might just work for them, we'll get inside the door. We're going to make the house look good, stage it. It's going to look so dialed in. They're going to fall in love with it. Impulse purchase. And that's the trick to pricing aggressively and marketing correctly for those type of listings.
Right. Yeah, I agree. Cause somebody's got their parameters set to, 1 million to 1.2. They don't even see it. Right.
I mean, how many times have you shopped for something and you're like thinking, I want this. And then you look at the thing next to it that's a little bit more expensive and you're like, okay, maybe I'll go for this one. I mean, it's just that idea to get in front of it. If you get a person in front of it, they'll make
right, more eyeballs. It makes total sense too. And I've just seen so many examples of it where, to your point, if the range says that this thing is going to sell anywhere from 950 to $1.5 million.
Yep.
$1.050, like price it the 975, it might get bid up to $1.025. You start at $1.050. Quite honestly, in this market that's competitive and there's multiple people out there bidding, somebody who's capped at 1050 might not think they have a shot, right? And so they might not even offer at all,
right?
And you're missing out on those buyers altogether. So cool, man. I agree on that. And for whatever reason, some people just don't know. They'll never learn. I'll watch it in my neighborhood too. Well, I see somebody just put something up at 640 and I'm like, what are they thinking? Yeah. Like at 599, they would have been a stretch. At 640, the thing 100% guarantee will not have any offers for 30 days. And then we'll just check back every week or so until we see a price reduction and be like, oh, that's interesting.
Well, the other thing too, is I tell people this, and this is like totally like my trick of tricks. Go into a house. If the people are still living there, they're not in any rush to sell their home, more than not. I mean, of course, some situations are different. If the house is empty, there's no one there, and you get that stale smell, they're sitting on something. They're sitting on either a maintenance, HOA, or a mortgage. And so you have a little bit more room to like maneuver a little bit too. Yeah. But there's a lot of tells in real estate that you can kind of get from like seeing a home or even like the agent they're using. Oh, it's my buddy Bob. Okay. Bob has done 2 transactions in all of, 2024 and 23. It's like, there's just little things that can give you a little bit of an inside edge when you're like, when you're trying to kind of make it happen. You know?
Yeah. Yeah. I think that brought up something in me when you're thinking about Bob, and the guy who's done 1 or 2 deals. Back to the shoulder surgery example, right? You want someone who's done that 1,000 times. This is an interesting conversation that happens a lot. I'm getting a lot of it now. All this stuff in the headlines, NAR settlement. People are like, oh, maybe I can get somebody at a discount to represent me for the largest purchase of my whole life. Not a good idea, but I want to hear it from you. I could tell the way you spoke. You're like, put Bob on the other side of the table in a transaction, and we'll see if Mark Mcdonough with, tens of millions in real estate closings ends up on the better side of negotiation. So, for somebody who's out there and they're like, oh, maybe I use this new tech firm or this discount brokerage and I save 1%.
Yeah.
What do you have to say to that? Because I already know too, people just don't know what they don't know. And so I can tell them in simple terms, like, do you want to save $5,000 and it cost you 30? That's net down 25 grand in the whole scheme of things. But what is your, I guess, maybe what's your value prop where somebody goes, you know what, why don't I just use the cheapest agent that I can find, regardless of if they only done one deal in the last 2 years? Why should I use a pro?
Well, I think, this is the whole NAR thing is kind of crazy. I think this could be a whole video for us, but I will say one thing about this is like, I think that if you want to go for like the cheapest, I've seen stuff written up for like $1,000, $2,000, just like that. Like, understand that, like, don't cry about it later. I mean, I don't mean to sound like bitter about this or anything too, and I'm not, but I'm saying, like, if you decide to go for the cheapest, if you decide that, you always get what you pay for. I think you should vet your realtor. I think you should make sure they're jumping through hoops for you, because that's what our job is, to make sure you're happy and you're taken care of, and that we're getting you, well, if we're in the buyer side, we're getting you what you want for the best possible price. And on the list side, we're doing the same thing, getting you as much money as possible for your house. But I also think that there's going to be a little bit, this NAR thing is going to be interesting. I have thought about this, and I think going with a pro, there are certain things that you just got to watch out for. Like, like, part of me, I look at this and I go, like, what if, like, your $1,000 agent doesn't assess right about waiving the appraisal contingency? What if he loses your earnest money deposit? Like, what if he gets you a house and he just realizes that, the disclosures weren't done right? I mean, there's so many little loopholes that can cost you so much more money that I say to myself, like, I just look at it and I go, it's just dangerous, for me. It's like, what's called stepping over dollars for pennies, just that's kind of how I look at it myself. But again, I mean, I think the thing that's so funny about my situation is, like, I think everyone's got their decision. Make your decision. But I think what you're going to always hear from me is, I'm not going to cry about it. I'm not going to sit about, oh, the NAR's. But for those people who decide to go that route, like, if you make your bed, lay in it. If you go the route of the cheap, if you go the route of hitting the listing agent, if you go the route of that, and somehow you get the shaft in this, or at the end of the day, you realize that maybe you didn't get the best deal in it, like, you did that to yourself. Like, and it sounds a little cold, but I do think that if you are at that position to buy a house, you do have to take responsibility for your own actions as well too.
100%.
And so for me, that's kind of how I look at it. I say for my clients, I got clients that have been with me from a long, long time, because we bust our butt. I mean, you see these dark circles. We're always out there for them and doing everything too. But for certain people who are thinking, you know what, I'm not going to, or maybe some people can't pay the buyer side commission or don't want to, like, there's ways, but you got to reach out to the agent and be legit, transparent, and just say, like, this is what we've heard. And if you sat down with our team and talked to us a little bit, our value proposition, we haven't had anyone leave the table. We're like, this is what we do for you. This is exactly what's going on. And, we've had great results with it so far. So,
right. Yeah. It's always in the comments. It's always, TikTok trolls or whatever. And I think it's laughable, to be honest. As somebody who's been around 1,000+ real estate transactions, I know my way around a real estate transaction.
Yeah.
I got my real estate license in 2018 because it was a requirement for the mortgage brokerage that I moved to in 2018. You know how many deals I've written as a real estate agent? 0. So I've transacted plenty of real estate personally, and I've used a real estate agent every single time, right? Because the level of work that goes into it, and I think it's kind of a thing that I try to hold back. Somebody told me last weekend, they're like, I was thinking about getting my real estate license. Like, it's just paperwork. Like, how hard can it be? And I think to myself, well, yeah, like, do you want to drill your own tooth
Yeah.
when you have a toothache, or do you want to, make your own sling for a broken arm, right? Like, you get what you pay for. And I think one of the analogies that I used recently, because same thing happens on the mortgage side.
Of course.
You're always going to find someone who's going to be able to do it for cheaper.
Of course.
But if they structure the mortgage in a way that cost you $40,000 in the long run, and you saved $800 this one time, like, who won?
Yeah.
Right. And so you can fly Spirit or you can fly Delta. They're both going to get you from Sacramento to Detroit. It depends on the experience you want. It depends on how smooth of a ride you want. And so, it'll be interesting, but I've not worried about it in like your tone. I can tell you're not worried about it, because the valuable real estate agent is always going to be around. There's always going to be guys like me that, even with all the knowledge I have, not going to write my own real estate transaction. I want a pro who does it all day, every day. And they're going to handle that because they're going to dot the I's and cross the T's. And it's the largest transaction of your life. You don't want to make a mistake and get sued. You want to know the ins and the outs. And I've had real estate agents who, because of the relationship and great teams like yours, help me say, no, this property doesn't work based on everything you've told me. Like, you probably don't want to do this. And like, so how do you assign a value to that? Right.
Yeah.
When somebody helps you buy something in a different neighborhood, and your net appreciation over the next couple decades owning that is an extra $250,000.
Well, okay, that's a good point too. Like, one of the things about our team is we do a lot of relos, right? A lot of relocations. I mean, we're probably the largest relocation team in Sacramento area. And so the idea also is that brings up another big thing. It's like, how do you know Sacramento? How do you know if Roseville's a spot for you?
That cheapest agent who does it for $1,000.
Oh yeah, Roseville's great.
I'm sure he's an expert.
Yeah, he's fine. Yeah, Roseville's good. Well, I think that's another thing too for us. I mean, like, before we even write up a contract, we're doing tours of areas and showing like all that stuff too. So I think, like, and I try to put myself in the shoes of the buyer too, saying, oh man, there's an added cost to it. This stinks. And I can kind of feel for it as well too. But I do think that at the end of the day, it's like, you're more at risk if you go the route of trying to, like, get in there without it, but then again, I mean, like I said, for me, I'm always like, I think the clients find the right realtor, or they should. And I don't know, they're, for me, like you said, I'm not really that worried about it. And I think for our clients that we work with are going to be the right clients for us. And I think we're going to be the right team for them. And I wish, like I said, maybe I was a little too this, but I wish the best for the buyers, because I do think they've gotten beat up a lot. At the end of the day though, but I just see so many pitfalls in going cheap on this thing. Like, I see lawsuits happening down the road. I see people going to listing agents and saying, hey, will you represent me for nothing? And listing agents going, no, I'm not going to do that. You got to find someone to write it up for you. Oh, $2,000. And like, what kind of protection does a buyer get? I mean, like, if someone's saying, I don't know if you should waive your appraisal contingency, that's on you.
This is the first one I've ever done.
I know
I'm not doing it cheap, but hopefully we get it right.
Yeah, I don't know. I mean, inspections, what are those? I mean, yeah, no, the house looks good to me. Sign here. I mean, like, there are so many parts of this thing, like NHDs, like, there's just so many moving parts to a transaction that I look at and I go, oh, here's my perfect analogy. And I just thought of it right now. Thank you to
LaCroix.
Yes.
Proud sponsor.
It's like that project that you do, like, in your backyard, right? And you're like, pouring concrete, I'm not going to pay that price. I'm going to do it myself. And then you go out there and you start pouring concrete and you're like, bought concrete. This just does not look right. And then you call up the landscaper to come in and he shakes his head and he does it and charges you double because you screwed up, and he's got to, like,
you got to undo your mess.
Totally.
Yeah.
So I look at it like, I think a lot of that is going to be happening in the future. But like I said, like, for me, like, one of the things that I'm always grateful of is, one is like, family, of course. But other than that, like I love my clients, man. Like, I've never really gotten to that conversation where it's like, the commission, the this or anything too. I mean, we break our backs for our clients. I mean, like, sometimes we put them in our car and we're schlepping around Granite Bay, then we're in Roseville, then we're in Rockland, then we're in Lincoln. We got 2 people on the team normally with it. I mean, so for me, I think our clients, as far as I go, like, I love them. I'm super grateful for them, and we'll continue to break our back for them. And I think things will just work themselves out, you know?
Yeah. I'm fairly certain that over the next decade or so, there's going to be a lot of happy people relocating to Sacramento
Oh
using the Mark
yeah.
McDonough team. Like you said, man, Sacramento is on the come up, man.
Well, here's the thing for me, because coming in from Marin, a lot of people are like, you're a realtor, you're selling Sacramento. I'm not a Sacramento real estate salesman. I'm a Sacramento real estate enthusiast. I'm a Sacramento enthusiast because like I look at this and I go, I can buy a house with a pool. I get new schools if I want them. I can go golf. I can go mountain bike. And I don't have this mortgage for something that isn't my dream home. It isn't like something that I look at and I go, how am I gonna do this? Or even a lot of people in the Bay Area, they don't even that concept of buying a house isn't even there. They're like, I'm gonna be renting forever. It's
Right.
just impossible for me to buy. Like, I don't want to live there. And I'm so glad I live here that I can say to myself, yeah, you know what? Maybe I'll buy an investment property this year. Maybe I'll buy a duplex. You know what, Matt? Maybe I'll buy a piece of land and I'll build my house on it. You know what? Maybe I'll go to Tahoe with my daughter and snowboard and take her out of school for the day. It's an hour and 20 minutes away. You know, like these are the things that for me are so just make my life really, really fun. And like I said, I love Sacramento. Whenever I talk Sacramento, I'm not trying to get people like selling people on it. I'm just telling you how excited I am every single day. And this is, if you ran into me in the street, I'd be telling you the same thing.
Yeah,
I'd be
yeah.
like, this is awesome.
Yeah.
So,
Yeah.
I don't
People
know.
get excited alongside you and you're like, yeah, if you need some help buying Sacramento real estate, I know who to call.
Oh yeah. This is fun though. I mean, we're lucky. We're very, very lucky and we're blessed to be in this area. We're blessed to be in a market that's growing, that's not like kind of tapped out. Bay Area is on a peninsula, so they're not doing a lot of new home building. Our landscape is changing. It's interesting, you know. California, for the most part, a lot of spots in California have stayed stagnant. You know, maybe remodels and all this stuff too. I mean, we're gonna have new communities. Folsom Ranch, new
Yeah.
Folsom, as I like to coin it, will be there. Then Elk Grove, all 30,000 houses. I mean, we're gonna be on the ground floor of something that's gonna be huge for California. So for me, I'm just loving where I'm at.
Thanks for joining me, man. I really appreciate it, dude.
No problem
If you're
at all.
interested in watching more content from myself, click here, or maybe here.